Hey guys, Mike here. So we got a huge week ahead of us. I mean, a huge week. You got 5 of the Magnificent 8 reporting earnings this week on Wednesday and Thursday. You got the Fed meeting, which is basically all but done when it comes to a rate cut. I believe we're looking at a 98% chance for a rate cut. And it's not even about the rate cut anymore. It's about listening about the balance sheet roll off. Will they stop that over the next couple months? Okay, so that's a big thing. Then you got the China U.S. meeting on Thursday, supposedly, but they've already come out with news saying, hey, we've already agreed to a bunch of different stuff, at least the foundation of it. So, of course, the market, you would think, should like that. Now that we're setting at all-time highs on the SPY, the Qs, the Dow, the QQEW. The only two that aren't all-time highs right now are IWM and RSP, which is the equal weight ETF for the S&P, but they're pretty much right there. We're going to talk about the IWM in detail. When it comes to that one, we're going to talk about the Mag 7 in detail and a few other things to be watching out for. Some stocks that probably are most likely going to break out this week, and we'll talk about the news that's going to push them up, okay? But, understand, what are we fixing to come into? We're wrapping up October this week, okay? Volatile month. VIX is getting crushed down right now, and you're sitting here coming in November, the best month of the year. I don't care how long some president's in or about any of that. It is by far, especially over the last 10 years, been the best. And this is what everybody's been trying to get positioned for. And so that's what everybody's expecting. This is assuming that the Mag 7 are going to be reporting really good earnings because they make up the biggest weight, right? You can see that we talked about this, I think it was a week ago. Do we finally start to settle out right here, which we did, and then start to head up for this year and rally? Also in earnings. Remember, firms are beating estimates by the most in over 4 years right now. And you can see over the last 4 quarters, that expectation has gone up, right? The amount of S&P 500 firms that beat estimates, the percentage has been going up over the last 4 quarters. And there's tricks to this and everything else when this happens. And one of those tricks is buying back shares. That's why you are seeing companies come out and say, we're going to buy back shares, because it helps them beat the EPS because you're retiring shares, okay? That's why you got companies who I would say have no business buying back shares. That's what they're doing, okay? That's how it works. And again, when it comes to earnings, it's all about the guidance and not so much the beats, because you can literally, this is legal, by the way, and it's just accounting tricks, really, to say that you can delay expenses, you can pull forward expenses, you can delay revenues, you can pull forward revenues. There's all kinds of stuff, okay? I mean, you've seen the growth for Apple. They're the king of this, right? But they buy back so many shares that they usually always beat on EPS, because I think, what I tell you, how many shares they've retired? And it's hundreds of millions of shares they've retired over the last decade. I mean, it's a crazy amount, right? And so it's more about the guidance. And the one thing we're going to be looking for, and I'll show you why in just a second, for the Mag, 7 or 8 if you include Avgo, or 9 if you include Oracle now, that it's going to be about the CapEx spend. Okay, that's the big one. And I'll show you why in just a second on that. And the reason why, and this could push stocks up this week, is this right here. Several banks led by JP Morgan Chase and Mitsubishi UFJ Financial Group are preparing a $38 billion debt offering as soon as Monday for data centers in Texas and Wisconsin, which Oracle uses. And you can see when it's broken down right there for Texas and Wisconsin as far as $23 billion and $14 billion. But the big thing to take away from this is, if it happens, this offering would be the largest AI infrastructure financing deal to date. You can see it's about the Stargate project. There's a joint initiative between Oracle and OpenAI, and that's why you most likely see stocks like CoreWeave, the Bitcoin mining centers that are now switching, saying, hey, we're going to try to turn into data centers, going up. Okay, that's because it's all about the spin. Even though they haven't done that yet, if it comes out, you would think they would. So we'll go into those stocks as well. Another thing to watch out for, especially during the China negotiations, is going to be the rare earth mineral talk, okay, which have already started delaying stuff and everything else. But you can see why. I mean, I've been covering this for 4 years before most people even start talking about it. And you can see, I mean, China dominates, absolutely dominates. They refine or process like 90% of rare earth minerals. And the biggest thing is to watch how MP reacts and these other kind of stocks that have to do. I covered in Saturday's video, those stocks I covered in Saturday's video, because usually the more restrictive China is, the better those stocks do, because you go, oh man, we really need them now. But again, when the Australian deal came out, what MP and the rest of them do? They dropped. Okay, so I want to see if they come up with a deal and China says, don't worry, we're not going to be restrictive, whatever it does. how those stocks react, because either way, we're going to need those companies. That's just the way it is, especially going over the next like 10 years and stuff. And so that's what you got to look for, because the administration has already said it and they should do it. I'm hoping they continue to do it, which is make more deals like they try to do with Australia, with these other countries, to have them process our rare earth minerals, to make deals to get rare earth minerals from them and all that good stuff. You just got to see how those stocks are going to react, because they've ran up huge. Okay, that is something to watch out for. Now, getting into the stocks that are going to matter this week, the heavyweights. We've already talked about Amazon. Make this very short and quick. They have earnings coming up, obviously, on Thursday. If the earnings are accepted by the market as a good thing, it's already broke out of that falling wedge. You should see these fibs start to come up at 228, 233 right there to 234. Okay, that's what should happen, and eventually all-time highs this year if the market likes what they have to say. Amazon's a difficult one, unlike the rest of these, because they have so many different things going on in that company. Okay, now Apple clearly setting it almost all-time highs right here. They're reporting as well. This trend line's been money for it so far. Keeps breaking above it, keeps riding it up right here. No resistance above. So if the earnings come out, the guidance that is comes out well, there is no stress on this one. And when you start pulling fibs, it's done a good job of following the fib since the April low. All right, rejecting off of them, making the fib support and everything. As you can see right here, going off the 0.5 fib, going up to the golden pocket, going up to the 0.79 fib. And so it's done a really good job of doing this as trend lines come into play. But again, the next level up is 284.54. Okay, so let's just see if the market actually likes what these guys have to say. Apple's moved up now to be the second heaviest weighted stock. It skipped Microsoft last week. Microsoft is important on Wednesday. You can see it did a short-term breakout right here. Hadn't done the bigger breakout, which I will put another trend line from that big candle so you can see it. But remember, this one sold off and has done nothing since the last earnings. Okay, absolutely nothing. You can see it's got resistance at 531.27. You can see a massive imbalance right there to target if it decides it wants to come up. Next level up on this one, you can see is right around like 544. Here's that trend line I was talking about. So again, it's closed like right on it. So if it can break out of that, this will continue to move. Remember, now this is the third heaviest weighted stock. You might see Apple and Microsoft just battling back and forth and flipping and stuff. So again, that's not even a big move. 4% right there to mitigate that. What is like 9%? Next level above that's 591, and you can't count Microsoft out. Okay, so just keep that in mind right here, because there is no fourth quarter rally without these stocks. That's just the way it is. Okay, now here comes Meta. Again, they report on Wednesday. Now here comes Meta. They report on Wednesday. You can see this one's up against resistance. So this one is set up for an explosive move, just like Microsoft. If it maintains this before earnings, and earnings are actually good, and somebody grabs Mark Zuckerberg and makes sure he don't talk about the metaverse, because it's pressed up against the all-time high VWAP, against the 50 moving average, against the 0.5 fib. It might move up before that, but still, it's following that trend line, and below is the 200. So you're either going to have this nice explosive move up, right? It's going to get to that golden pocket. It's going to move up to all-time highs right there. Or we're going to end up dumping hard if you start talking about the metaverse and billions, and we're cutting CapEx spending and laying people off, which, all that fun stuff. But a lot of people are expecting this one to explode higher and just start heading all-time new highs. Okay, so again, if it starts heading up, that trend line will give us our fourth touch right there at 773.81. And then if we pull out even farther, you can see the next level above will be 825.37. And then Google, of course, which has been the best performer, has been following this trend line right here. If you just go back, you can see it just keeps bouncing off of it. Remember, this one didn't even give us a 50% retracement back down. So that's why I'll say this one's really performed well. 37% since it's riding this trend line up since the last earnings. Broke out of this channel right here. And so it has no resistance above. And it reports earnings this week as well. So a lot of moves are set up. It's there for the taking if they can just deliver. And you can see the level 273.52 will be the next fib level up right there. Above that is like 291 and then 301 for Google right here. And again, we're just looking for how much are you spending on AI. Obviously, what's the guidance here for the rest of the year, what's going on in 2026, and all that fun stuff. Now, looking at Tesla, it's already reported earnings. I'm just looking to see if it stays in this megaphone pattern after that great recovery off the dump on the earnings. You can see, decent sell down. People, I'm not going to be surprised at all if we come down here and start testing 419, 422. I won't even be surprised if we start coming down and testing the bottom of this megaphone pattern, to be honest with you, maybe in the last week of October. But understand, it, along with so many other stocks, are going to be coming into their best month. I mean, it has a 73% win rate, almost a 12% average return right here in November. So we'll see if it can pull it off. Again, you got NVIDIA is basically almost certain to head to 200 since now it's closed above that 185 spot. And so we'll see if they can move together. Now, CoreWeave, data center stock, came down here, ended up bouncing off this trend line. Also, this anchored VWAP right here, as you can see. And so I believe that's the all-time low anchored VWAP. Gave us a nice discount. Nice move back up. It was a really big move back up from 114 to 132 in 2 days right there. Again, this is a high flyer, but the big move comes if it can break out this triangle pattern right here. And so if this thing can push back up to the mid 140s right there and break 148.28, then we're heading to 165, 190, maybe even new all-time highs. Again, this one takes on a lot of debt. It's more of a theme stock currently right now. Has those big contracts with some big players and stuff. And so this is a big time high flyer right here. But getting above all those anchor VWAPs is a plus for this one. Now, IWM will go into some detail here. As we talked about, it's one of the few that's not at all-time highs yet. A lot of people expect this, and we're looking forward to see if it pulls off a 2023-2024 move in the fourth quarter, because before that, it usually was horrendous. But when you pull up and just look, 2024, big move up. Again, this was after the election when everything was moving up, and so it moved up and then just completely tanked in December, okay? But it had a really, really big move up for IWM, about 12% in a month, which is an amazing move for IWM, and then, of course, it just tanked. You go into 2023, you can see almost the same thing. I didn't see any catalyst for it, but again, it was just I don't remember what the catalyst was, but you're talking about a 24% move. So that was huge going into year end. Now, this depends on just really 4 sectors for this thing: financials, healthcare, industrials, IT. Okay, they make up a major portion of IWM. If you want to include consumer discretionary, it makes up about 10%. That's fine. But you can see right there, I mean, you're almost talking, what is that, like 60, 70% of the IWM just in those 4 categories. And so that's the problem. If those don't pull up, then yeah, this move is not going to happen. This is why a lot of people don't even invest in IWM. What they do is they look at some of the best performing stocks. And when you look at this one, you know, as of October 2025, like market cap wise, top 10 companies, Mr. Carvana, I don't know who Fix is, INSM is another one, but you got Rocket Labs, SMCI, ASTS, you know, BE's been doing good, SAT, so a lot of space stocks, energy stocks, okay? So pay attention to that one. If it does get to moving, again, you're looking at the next level of around 264.25, and then above that, around the 280, 285 mark. So do not be surprised if that happens. And when you look at the move, it's not even that big a move. I mean, that's between 5 and 16%. I just showed you some pretty big moves in the fourth quarter. I'm talking about like overall, November and December, what's left of the fourth quarter, okay? Now, Netflix, we can see right here, below the 200, and a lot of people are talking about, wow, what happened last time it was below the 200 and got oversold. Right now, we're not oversold. It is sitting at somewhat of a support level right here. But again, when you look at last time, which has been a couple years, right? When it got down past the 200 and got oversold, what people are missing out on is what brought it back up? Earnings. Well, that's a little opposite of what's happening now. What brought it below the 200 this time? Earnings, okay? Because it went on a huge run, but it had a crazy earnings call when this happened. So this is definitely one to watch because it's in the AI play. It's not in the theme area. None of those stuff. None of that kind of stuff. None of that kind of stuff, right? So this was going to be interesting. So if it does get oversold, you know, and to get oversold, it would have to come down here in that area around that golden pocket area. Let's see. I mean, it could drop farther. You can see on the weekly, it's below the 50 on the RSI. And so, but again, it is Netflix, okay, and it is a good DCA area coming to in a weekly fair value gap. That will be a nice one because that will put it down around between 23-25%, around the 978, 982 mark. But again, you know, I'm not going to be surprised if people start dip buying this one like crazy. When you look at the MACD on it, you can clearly see, that's what I'm saying, you get the weekly, monthlies, that kind of stuff, and you get these bearish MACD crosses. Not good. On the monthly, not there yet. It looks like it's trying to turn over. But this one definitely needs to bounce soon for sure. But I'll be watching that golden pocket area if it gets there. Now, Circle, this one right here is a crypto stock. It's all into the stable coins. You can see if it breaks out of this trend line, probably going to be heading up to 175, 180 right there above those anchor VWAPs. But this one needs crypto to turn, right? This is a big one. And understand, like, it's not gonna actually go anywhere without it. And you know, other stocks to watch on this are going to be Coinbase, also Mr. But you can see what I'm talking about. If it gets above this level, especially 153, it's going to fly. up to 186. You're going to get in that volume gap on the visible range volume profile, and it's going to fly, okay? And you can see when you put on Coinbase and Mr., they're going to fly too, most likely, because that means crypto has absolutely turned around. When you look over here, earnings, we got just a boatload of them, so I'll try to get through all of them. Monday, very quiet. Okay, we're going to have Waste Management, Bed Bath & Beyond is a high flyer, Whirlpool, nothing else I really see on there. But it really begins on Tuesday, okay? That's when we get to start having fun. And I got to highlight whole categories here because you're going to have SoFi, United Healthcare, PayPal, UPS, Corning, which is basically Monopoly, HSBC, JetBlue, DR Horton, Royal Caribbean Cruise Line, and Wayfair. And then you'll have Enphase, Bloom Bookings, I believe that is Visa, and then Cheesecake Factory at the bottom if you want to look at that one. Electronic Arts is another one. Wednesday, Verizon, Boeing, CVS Health, Caterpillar, Etsy, Kraft Heinz, ADP, and ConocoPhillips. And then we get to have the big boys that afternoon. Meta, Microsoft, Google, Chipotle, Carvana, ServiceNow, Mercado Libre, Starbucks. So that is going to be a loaded aftermarket earnings spree there. Thursday morning, Eli Lilly, Merck, so you get the healthcare boys coming in here. Comcast, Roblox, Advanced Auto Parts is going to be another one. And then we get more big players in the afternoon on Thursday. Amazon, Apple, and you're going to have Coinbase, Reddit, Western Digital, Rocket Companies, which is the mortgage company, Riot, Cloudflare, and then Roku. Friday, the oil companies are going to be reporting. You'll have Exxon, Chevron, and of course then we'll get AbbVie. And then maybe you can mark Charter at the bottom down there. Now, when it comes to data, not really loaded or anything, as you can see. And again, if the government's closed, it's going to be even smaller and it's going to be tentative. But on Monday, you can see core durable goods you'll have. On Tuesday, Richmond Manufacturing Index, CB Consumer Confidence. On Wednesday, you got pending home sales. And then you'll have the FOMC meeting in the afternoon. So that's really all that matters. And we know they're probably going to cut rates. Let's listen for the balance sheet, okay? Thursday, advanced GDP, quarter of quarter, natural gas storage, and then of course Friday, a lot of this is tentative, core PCE, employment cost index, personal income, personal spending, Chicago PMI, and new home sales. Woo, that is a mouthful. So let's buckle up for another fun one. Let me know how you're playing this one. Please hit that like, subscribe button on your way out. If you want to sign up for the membership, West McDonald's combo at $7.99. Just hit the first link in the bottom of the description. And I will see you guys tomorrow to wrap up another fun day.